In a rapidly evolving landscape of digital finance, the U.S. Securities and Exchange Commission (SEC) is gearing up to tackle the complexities of cryptocurrency regulation. During a recent address, SEC Chair Gary Gensler revealed plans to formulate new rules specifically targeting crypto tokens, an initiative that comes amidst heightened scrutiny and a push for clearer regulatory frameworks in the wake of significant market upheavals. Gensler's commitment to enhancing regulatory oversight reflects a broader recognition of the challenges posed by the dynamic nature of cryptocurrency markets. The SEC's proposed regulations aim to ensure investor protection and market stability while fostering innovation. The urgency of these developments is underscored by the collapse of the FTX exchange, which has transformed cryptocurrency from a bipartisan topic into a contentious political battleground. Christopher Giancarlo, the former chairman of the Commodity Futures Trading Commission (CFTC), highlighted this shift, noting that the fallout from FTX has significantly influenced political attitudes toward digital currencies. Speaking at a Broadband Live event, Giancarlo articulated concerns that the U.S. risks losing its leadership in cryptocurrency innovation if political divisions hinder effective regulation. If our dollar is going to remain the world reserve currency, we need to dominate this technology and not squander it through petty political fights, he stated. This sentiment resonates with many in the crypto space who argue that bipartisan cooperation is essential for creating a regulatory environment conducive to growth and innovation. Giancarlo also pointed out that the political fallout from FTX has had real electoral consequences, leading to a notable shift in the Democratic Party's stance on cryptocurrency. He attributed this change to the embarrassment surrounding the political contributions made by FTX founder Sam Bankman-Fried, which he believes has fostered an anti-crypto sentiment among former supporters. As political tensions rise, the Trump administration is attempting to reposition its stance on cryptocurrency. Giancarlo highlighted a strategic shift that includes the establishment of a cryptocurrency stockpile and a Bitcoin reserve to protect the dollar's status. He explained that to maintain control over the dollar's global price, the U.S. must actively engage in Bitcoin trading, similar to how it manages petroleum. The administration's intent to foster a more favorable environment for cryptocurrency is seen as a necessary counter to the growing global competition in digital finance. In another significant development, the healthcare company KindlyMD announced a merger with Nakamoto Holdings, a Bitcoin investment firm led by David Bailey, a prominent cryptocurrency advisor to former President Trump. This merger has propelled KindlyMD's shares by an astonishing 350%. Reflecting the increasing convergence of healthcare and cryptocurrency sectors. Bailey's vision for Nakamoto includes acquiring and holding Bitcoin, a strategy that aligns with emerging trends where firms seek to leverage digital assets as core components of their business models. Bailey's influence extends beyond the financial realm, as he has played a pivotal role in advising Trump on digital asset policy. His recent fundraising success, reportedly raising nearly $200 million from over 200 investors, underscores the growing interest in Bitcoin and its potential as a key investment vehicle. The merger with KindlyMD signifies a strategic leap, broadening the scope of the company beyond its original healthcare focus to encompass a more extensive Bitcoin-centric business model. As the political landscape continues to shape cryptocurrency regulation, observers are keenly watching how these developments will unfold. With the SEC's new rules on the horizon and significant mergers reshaping financial paradigms, the future of cryptocurrency in the U.S. hangs in a delicate balance. The potential for bipartisan cooperation remains a critical factor in determining whether the U.S. can reclaim its position as a leader in the global cryptocurrency arena or if it will cede that ground to international competitors. As the industry matures, the coming months will be pivotal in shaping the trajectory of digital currencies and their integration into the broader financial system. In a significant development in the cryptocurrency sector, Bitcoin native holding company Nakamoto has announced its merger with KindlyMD, marking a bold step towards the integration of healthcare and blockchain technology. This strategic move revealed on May 12, 2025 aims to leverage the innovative capabilities of both companies to create a more efficient and transparent healthcare system. David Bailey, CEO of Nakamoto, highlighted the merger's potential, stating, "By merging with KindlyMD, we are not just integrating two companies, we are setting a new standard for how blockchain can revolutionize healthcare delivery." The merger comes at a time when interest in cryptocurrency and blockchain applications is surging, particularly as Bitcoin's price recently surpassed the $104,000 mark. This milestone reflects increasing investor confidence in digital currencies and has sparked renewed enthusiasm for mining, evidenced by the rising popularity of cloud mining contracts. As Bitcoin approaches its all-time high, the market is witnessing a broader trend of growing engagement with alternative cryptocurrencies, including Dogecoin, which also saw a notable increase in value. Concurrently, another significant announcement came from the Trump family as Eric Trump and Donald Trump Jr. prepared to take their Bitcoin mining venture American Bitcoin public through a merger with Griffin Digital Mining. This strategic move, which may close as early as the third quarter of 2025, will see the combined entity listed on the Nasdaq under the ticker symbol ABTC. Eric Trump, co-founder and chief strategy officer of American Bitcoin, emphasized the need for the U.S. to dominate in the global Bitcoin mining arena, declaring, "We won the space race. We better win the crypto race." His remarks underscored a broader sentiment within the industry regarding the importance of maintaining a competitive edge in the rapidly evolving crypto landscape. The Trump family's venture is not without controversy. It follows the launch of a $Trump meme coin, which has drawn both interest and skepticism from the crypto community. Nonetheless, the public offering of American Bitcoin represents another high-profile entry into the market, further intertwining traditional business strategies with the dynamic world of cryptocurrency. Market analysts are closely watching these developments, as they signal a deeper integration of cryptocurrency into mainstream financial practices. The merger between Nakamoto and KindlyMD alongside the Trump family's public offering indicates a growing trend where blockchain technology is increasingly viewed as a viable solution to traditional business challenges. As the cryptocurrency landscape continues to evolve, the implications of these mergers and public offerings will likely be profound. Investors are becoming more sophisticated, and traditional businesses are recognizing the potential of blockchain technology to enhance operational efficiencies. The coming months will be crucial in determining how these ventures perform in the marketplace and how they influence broader acceptance of cryptocurrency and blockchain solutions. With Bitcoin's price remaining stable around $104,000 and optimism surrounding the future of mining and blockchain applications, the industry is poised for significant growth. The integration of healthcare and cryptocurrency through initiatives like the Nakamoto KindlyMD merger could pave the way for innovative solutions that address pressing issues in the healthcare sector, all while reinforcing the importance of cryptocurrencies in the global economy. As these developments unfold, the world will be watching to see how they reshape the financial and healthcare landscapes. In a remarkable intersection of politics and cryptocurrency, 220 investors have collectively spent an astounding $148 million to secure a dinner with President Donald Trump at his Washington, D.C. golf club. The event billed as an exclusive opportunity to hear the president discuss the future of cryptocurrency has ignited debate surrounding the ethics of integrating political access with financial investment. This gathering, set to take place in a lavish setting overlooking the Potomac River, has drawn attention not only for its opulence but also for the potential implications for both the cryptocurrency market and political influence. The dinner was announced by CIC Digital LLC, a subsidiary of a conglomerate tied to the Trump family, and Fight LLC, which together control a significant majority of the Trump memecoin supply. Investors qualified for attendance based on their purchases of the Trump coin, with those holding at least 4,196 units, approximately $55,000 at the time, gaining entry. The more affluent among them, those holding an average of 325,000 Trump coins valued around $4.3 million, received additional perks, including a VIP reception prior to the dinner. Among the most notable attendees is an investor using the name Sun who has amassed approximately 1.43 million Trump coins worth over $19 million. Speculation surrounds Sun's identity, with some suggesting it may be linked to Chinese billionaire Justin Sun, although he did not comment on the matter. Interestingly, the competition for seats saw some investors making significant purchases shortly before the deadline, indicating a strategic approach to securing their spots. However, the dinner has not been without controversy. Critics argue that it raises ethical concerns regarding the commodification of political access. Democratic Senator Jon Ossoff voiced his apprehensions, stating he is granting audiences to people who buy the memecoin that directly enriches him. This sentiment is echoed across political lines as legislators attempt to introduce the Meme Act to prevent elected officials from issuing memecoins, which could potentially facilitate bribery or foreign influence. In parallel to this politically charged event, Eric Trump has announced plans for his cryptocurrency firm American Bitcoin to go public through a merger with Griffin Digital Mining Inc., already listed on the Nasdaq. This expansion into the cryptocurrency space is part of a broader trend within the Trump family to leverage their name and political connections to tap into the lucrative crypto market. American Bitcoin, founded in March, aims to position itself prominently within the Bitcoin mining sector, which has seen significant growth and interest from investors. The recent surge of interest in Trump coins and the announcement of the dinner have sparked a trading frenzy, causing fluctuations in the coin's value. Initially launched as a memecoin, Trump coin experienced a meteoric rise in value, surging to a market capitalization of $14 billion shortly after its release. However, this value has since plummeted by over 80%, leading analysts to predict further declines following the dinner event, as many attendees liquidated their assets post-qualification to mitigate potential losses. Amidst this backdrop, President Trump has actively championed the crypto industry, reversing previous regulatory stances and advocating for legislation that favors digital currencies. This dual role of a sitting president as a promoter of cryptocurrency while simultaneously benefiting from its financial mechanisms has drawn scrutiny from both ethical watchdogs and political opponents. As the dinner approaches, the implications of these developments on the cryptocurrency market and on American politics remain to be seen. With increasing calls for regulation and scrutiny over the intertwining of political and financial interests, the future of initiatives like the Trump coin and similar ventures will likely face mounting challenges. As the landscape evolves, investors and lawmakers alike are keenly watching how these events unfold, signaling potential shifts in both market dynamics and political accountability. In a significant turn of events for the cryptocurrency market, Ethereum has emerged as a leading force, buoyed by recent geopolitical developments and critical upgrades to its network. As of May 12, 2025, Ethereum's price has surged, reflecting a broader trend across the crypto landscape, which has seen renewed interest from investors. The catalyst for this market momentum can be traced back to the announcement of a reduction in tariffs between the United States and China, fostering a risk-on trading environment among investors. This trade thaw has sparked optimism, leading to a substantial increase in cryptocurrency valuations. Ethereum in particular has distinguished itself, gaining as much as 12% since the market closed on Friday, translating to a remarkable 34.2% increase over the past week alone. Despite a slight dip of 1.69% on the day, Ethereum remains a focal point for traders and investors alike. Major tokens including Dogecoin have also seen impressive gains, demonstrating the contagious enthusiasm within the market. The tariff reduction, which slashes duties on U.S. imports from China from 145% to 30%, comes as a relief to many market participants concerned about the potential collapse of the global economy. This temporary reprieve, lasting for 90 days while further negotiations take place, has restored a sense of stability, encouraging investment in riskier assets such as cryptocurrencies. As Travis Hoyam of The Motley Fool notes, this uptick is more than just a short-term bounce. It reflects a shifting sentiment in the market where cryptocurrencies are increasingly viewed as viable alternatives to traditional financial structures.
Ethereum's recent price movements can also be attributed to its ongoing upgrades aimed at enhancing network efficiency. Following the successful implementation of the Pectra upgrade, which has improved transaction speeds and reduced costs, developers are now eyeing the Fusaka update. This anticipated enhancement is expected to streamline transactions for Layer 2 blockchains, making Ethereum more competitive against faster and cheaper alternatives. However, while these upgrades are promising, they may not be fully realized until later in the year, leaving Ethereum to contend with the current advantages of competing blockchains. The broader cryptocurrency ecosystem is also witnessing shifts in focus, as seen with Cardano's renewed popularity following its founder Charles Hoskinson's announcement about developing stablecoins with cash-like privacy features. This highlights an increasing demand for privacy in blockchain transactions, a concern that has not gone unnoticed as users seek more secure options. As cryptocurrencies continue to correlate closely with the movements of growth and tech stocks, the current bullish sentiment may signify a pivotal moment for digital assets. While traders express optimism about Ethereum's potential to reclaim its previous highs, some analysts remain cautious. Hoyam expresses a nuanced view, suggesting that the future may favor stablecoins over traditional cryptocurrencies, particularly as the blockchain technology matures and finds its footing in mainstream financial transactions. Looking ahead, the crypto market's trajectory remains uncertain but ripe with opportunity, driven by ongoing technological advancements and evolving regulatory landscapes. As Ethereum and its competitors work to enhance their offerings, investors will be watching closely to see which projects can solidify their positions in an increasingly competitive environment. The coming months could prove crucial as these developments unfold, potentially reshaping the future of cryptocurrency. In a landscape increasingly dominated by blockchain technology, Solana has emerged as a formidable player, capturing significant attention in the cryptocurrency realm. Recent analyses and reports underline a remarkable breakout year for Solana, particularly as it positions itself as a foundational infrastructure layer for the future of finance. The latest edition of the State of Crypto report from 21 Shares delves into Solana's meteoric rise, highlighting its impressive capabilities and growing ecosystem. The report, released on May 12, 2025, paints a compelling picture of Solana, which boasts ultra-high transaction speeds and minimal fees, making it an attractive option for developers and institutions alike. Solana is redefining what's possible with blockchain technology, stated Adrian Fritz, head of research at 21 Shares. He emphasized that the platform's combination of performance, usability, and scalability sets it apart from competitors. The report includes a detailed analysis of Solana's ecosystem, comparing it with other leading blockchains such as Ethereum, Sway, and TON. It also evaluates Solana's potential in decentralized finance, DeFi, artificial intelligence, and emerging trends like the memecoin phenomenon. Significantly, Solana has achieved a processing capability of over 3,000 transactions per second, with transaction fees consistently falling below 1 cent. This efficiency is evidenced by a staggering $364 billion in on-chain volume recorded during a peak activity month, equating its throughput with that of Nasdaq. The report notes crucial integrations with major companies such as Visa, Shopify, and PayPal, further solidifying Solana's position as a go-to blockchain for next-generation applications. As Solana's popularity surges, so does interest in its native token SOL. Recently, SOL has seen a remarkable price increase, climbing 88% in just 4 weeks, reaching $170 from under $100. This bullish sentiment among traders is reflected in substantial option trades, indicating confidence in SOL hitting $200 by the end of June. Greg Magadini, director of derivatives at Amber Data, reported that traders have engaged in significant call options trading, reinforcing their bullish outlook amidst a broader crypto market rally. The broader implications of this surge extend to institutional investments as well. DeFi Development, a Nasdaq-listed company, recently announced it had acquired over $100 million in Solana's SOL tokens, a move mirroring a growing trend among public companies to diversify their balance sheets with cryptocurrencies. Following this investment, DeFi Development's shares surged by 20%, reflecting investor optimism in the crypto sector. Further compounding Solana's growth are the recent advancements in its decentralized finance protocols, which have seen total value locked TVL in the ecosystem approaching $10 billion. The rise of Solana-based meme coins has also contributed to increased market activity, showcasing the platform's versatility and appeal. Market analysts are watching Solana closely, particularly as it nears critical resistance levels in its price movements. Currently hovering around the $180 mark, any breakout could propel it toward previous highs, with technical indicators suggesting a potential price target of $500 based on historical patterns. As Solana continues to innovate and expand its ecosystem, the convergence of high transaction throughput, low fees, and institutional interest marks it as a key player in the evolving crypto landscape. With ongoing developments such as potential ETF approvals and increasing Wall Street engagement, the future looks bright for Solana and its stakeholders. As the cryptocurrency market continues to mature, Solana's trajectory will be pivotal in shaping the next generation of digital finance.